Good morning. Good morning. This is Charles Coachman, and this is Coachman on Real Estate. We are starting our inaugural show right now, and we are going to have a special guest, a young man that has been doing real estate mortgages for a good long time, for over a dozen years. So I'd like everyone to welcome Drew Frampton.
Morning, guys.
Good morning. Drew, how are you?
I'm excellent. I'm drinking my cup of coffee and enjoying the Tuesday morning. How about yourself?
Awesome. Let me flip this up there. Anybody that needs Drew's information, we will get that out there for you. Drew, I just wanted to get started by asking you about how you got started in business and how long you've been in business.
Excellent. Yeah, it's kind of a funny story. Most people that are in the mortgage business probably don't dream of being a loan officer when they're young. And I would say I'm not an exception to that either. So my dad was in construction, building residential homes. My mom was a bookkeeper. I always loved real estate, grew up around, the construction of homes and, kind of treating those stick-built construction projects as my jungle gym with my dad. And I always enjoyed that, but he strongly encouraged me to stay away from swinging a hammer for a life. So anyways, I thought I might get into real estate. And, as much as real estate was exciting to me, I really enjoyed the numbers and kind of, how to actually make this a reality. And I kind of fell into the mortgage side of it. I had a family friend who offered to have me come and help him basically move his office. And he saw my work ethic and said, hey, why don't you start answering phones? And from there I started processing loans, and pretty quickly I got my license. And I was straight out of high school, so it was something that happened pretty quickly for me. I think I got my license when I was maybe 19. I think I sold one home and decided I'm going to do the mortgage side of it because well, I wasn't very good at it. I wasn't good at the real estate side.
Come on, it takes everybody a little bit of time to get going, and usually we're looking for family or friends to give us a hand to get ourselves started. So, how long have you been doing loans again, Drew?
So I got in the business in 2006. If you know anything about, real estate and kind of the history of it, 2006 was an exciting time to get into real estate, get into mortgages. It was kind of this just, rocket all the way up to, 2008 when things started to plummet back down. I stayed in it, and I got to say I learned a lot.
Awesome. So let's go ahead and get right into the questions then. I wanted to talk with you about the 6 overly simplified steps to financing a home. Why don't you go ahead and talk about that, how people should choose a loan officer and such?
Sure. So let's dive into it. So choosing a loan officer, it's an important decision to make, right? You're basically buying a house. Who's going to help me figure out the financing side of things? So choosing a loan officer is very important. What I would say is, get a referral, right? If you're already in communication with the real estate agent, talk with that real estate agent, figure out who they've worked with, because chances are they've probably worked with a few more loan officers than a first-time home buyer or somebody who's even bought a few times. Friends and family asking for a referral, colleagues at work, just seeing what other people's experiences are, because unfortunately, what's posted out there, what you might see on a television commercial or something like that may not be the experience you receive. So that's something that I would say is get a referral.
Okay. Now, how about applying for a loan?
Yeah. So, once you find a loan officer, the very next step would be to actually apply for a loan. And that starts with going and actually submitting an application. You don't receive full underwriting right away. What you're going to get is what's called a pre-approval. So a pre-approval, it's essentially somebody like me, a loan officer, reviews everything that you submit. So your credit scores, your income, your assets, and they determine what the bank is comfortable lending you.
Okay. I always tell my people before I'm ready to take them out to show them a home, make sure that you get pre-approved. I don't want to take you out to look at a 1.2 million home when it turns out that what you can really afford is $800,000 home. How
Right.
important is that?
Yeah, I mean, there's kind of two sides to it, right? There's the bank saying, "Hey, we're comfortable lending you $2 million," right? And the joke in the office is, boy, you might qualify for a $2 million home, but do you have to sell the dog, cancel cable, never eat out again, or is this going to be comfortable for you? And there's really no one size fits all. And unfortunately, that's the way my industry is built, because it's all built on, can we take these bundles of loans and can we sell them off to these marketplaces? So it's really, the banks and the lenders, when they're looking at these numbers, they don't care if you're sending your kids to private school or public school. They don't care if, you like running the AC, all the time, right? So they don't really care what your budget is. So that's something that you really have to figure out is, one, what do you qualify for? But two, more importantly, what can you afford?
And that is the most important thing.
Absolutely.
So as we go through that, the next thing that I try to do on the real estate side is get you into contract. Once we get you into contract, normally the other real estate agent, the seller's agent, will then be saying, "Hey, I need to contact your lender." So what do we do once we get into contract?
Yeah, so that's when the fun starts. Getting into contract is take a step back. That's, you've submitted an offer, maybe you've submitted multiple offers, but it's when the seller has said, "Yes, we will sell this home to you." And Charles, you tell me if you see something different, but typically, and we can always say typically, but it may be different in reality or your experience, but typically it's roughly a 30-day process of getting into contract to closing. So those very first days, there's a lot of things that everybody's doing. It's kind of a concert of effort here. So for the loan side, the lender's going to reach out and say, "Okay, we're in contract. We need you to sign some paperwork. We might need some refreshed, pay stubs or asset statements, and we need to lock in an interest rate." And from there, we start to do the true loan process and begin to work on getting the funds ready so that you can buy your house.
Okay. Once a person has got an offer approved, what now is the typical length of time that it'll take to get an appraisal done and get the full loan approval in?
Yeah, that is a very good question. So the default contract says, I think is it 17 days, Charles? I don't think I've seen 17 days in about a decade, but there's these default kind of dates. And, that's essentially, I don't know of many contracts I see that come in with these default dates. So they're always shorter. And what we're trying to do is basically make sure that the buyer is not going to get into trouble, right? The financing's going to be there. The home is worth what it's worth. That's what the lender's concerned about. So we're going to write in the contract a certain amount of time. That's going to take anywhere from, on the shorter end, somewhere around, a week to 10 days. On the longer end, about 2 weeks to get everything wrapped up and kind of, taken care of. And yes, we've got the green light to move forward and buy this home.
Okay. Now, what's the difference between an FHA loan and a loan where you're going 20% down? Can you explain those differences?
Yeah, definitely. So an FHA loan is, it's kind of touted as a first-time home buyer program, but it's really open for pretty much anybody. The difference is you can put as little as 3.5% down. And sometimes there's down payment assistance that you can even put less down, but the typical answer is 3.5% down. Whereas if you did a conventional loan with 20% down, the what you're not going to pay is what's called mortgage insurance. Okay, so there's a couple of different mortgage or a couple different insurances out there that you want to be aware of. There's the fire insurance, right? The God forbid my house is going to burn down and I'm protected. And then there's something called mortgage insurance, and it's something the borrower, you, pay for, but it doesn't protect you. It protects the lender. And what you got to think is, if a bank has to foreclose, if you've defaulted on your mortgage and it takes a long time and they have to basically take the home back to make their money back, they don't like doing that. So instead, and typically they're losing money unless you have a considerable amount of equity. So instead, you take out what's called mortgage insurance, and it protects the lender. So it's a way that you can essentially make the lender feel comfortable to lend more than the amount that they would typically lend.
Okay, great. Now, we had been in a market, and we still are, that people wanted to close in 20 days. Now, when you're getting a loan, what's the typical length that you're seeing now? Can you close in 20 days still, or are you going to be looking at the 30 to 45 day closings?
Again, it's going to depend on your scenario, what kind of loan program, and a myriad of other things as well. Even the location, because there's a lot of pieces there that are, part of it. So for instance, an appraisal, you're going to have somebody come out to the home, inspect it, and give you a value on that home, right? That's what the bank's going to require. Some places, they can come out and inspect within a few days. Some places it's 2-3 weeks. I helped a friend buy a home, or help him with the financing out of state. And I think this was in Pennsylvania. The appraisal was 30 days. That was the time frame to get an appraiser out there. Here that wouldn't fly in the Bay Area. It's a very competitive, a very fast market. So typically, like in our home county, Santa Clara County, you're getting somebody out within a handful of days. If you get a contract over the weekend, somebody will be out and inspect within, by a Tuesday or Wednesday, and have the report back by the end of the week.
Okay. All right. Hey, and I just want to remind everyone, we've got Drew Frampton here with O2 Mortgage, and I've got his information, his contact information. The only thing that I don't have there is his cell phone or direct number. Drew, if you want to add that in, that'd be great. But
Okay.
Here's his contact information. If you'd like to reach him, we'd sure like to see you do that.
Excellent.
Okay, I want to get to some of the questions that we're that we've been talking about, and take another look at them. I'm ready to start looking for a loan. Should I start by shopping rates?
That is a very good question. And I think it's a question that a lot of people have, and sometimes people don't ask, especially me, sitting on one side of the table. I'll have to say I am biased towards this, of course, but I would say no, don't start with shopping rates. Here's the problem with my industry. If you're shopping for rates, what you're going to see is something that probably you're not going to get, right? It's this teaser thing that doesn't really exist, or at least it doesn't exist in your scenario. So finding a good loan officer, a good person who's going to not only help you navigate through this bank world and home finance world, but represent your best interests, that's going to be imperative in my opinion.
Okay. Again, I want to talk about this again. How do I choose the right loan officer for me?
Yeah, that's a great one. So like we talked about, getting referrals from many different people is very important, right? A real estate agent by far is going to work with the most amount of loan officers, and they'll know who's good, who's not, because you can have that shiny, outside, but are they really, going to help you from day one to getting into contract to closing to even after that, right? So a real estate agent is going to be your best bet getting a good referral on a loan officer.
Okay. Should I look for a mortgage banker or broker, and what's the difference?
That is a very good question, and something that some people don't even understand the difference. To boil it down to its simplest terms, I'd probably say A banker is somebody that's lending just their products, right? You walk into a bank, they have their products, right? A broker is going to be able to look out into the vast kind of arena and marketplace and find all these different products out there and find something that's best for you. What's going to be better? Typically, I would say a broker is typically better. The nice thing is for us, we are both a mortgage banker and a broker. So we've got this hybrid model. So we've got lots of options, but we still have lots of control, because the downside of a broker is a lot of times you send it off to a bank that you only have a relationship with, but you don't actually work with. So you can't, as a loan officer, say, hey, Charles wants me to get the appraisal in by such and such a date. You just kind of wait in line. So having that hybrid model has really been fantastic for us, especially in this high-paced, fast, competitive market, which is the Bay Area.
So right now, and we tell people all the time, interest rates are at all-time lows. What are you seeing right now?
Boy, so I got in the business in 2006. A good interest rate back then was about 6.5%. And for those who've been around longer than I have, I talk to people and they bought their first home in the teens. So to be in the low threes and the twos is incredible to me. I mean, we're talking a 30-year fixed mortgage, meaning for the life of the loan, that interest rate does not change. To me, that's incredible. It's free money in a lot of ways. If you have the ability to even consider buying a home, look into it for nothing else, just because of these kind of historic lows. We
bought our first home in the early 80s. Our interest rate was 11.3875, and it was a variable rate.
Yeah, that's a bit different than today.
The first home that I went out to take a look at, I looked at buying a condo. I was making about $2,000 a month. I would have to make $5,000 a month to even look at a $100,000 condo.
Wow.
At that time, it was 18 to 20%. It was just outrageous.
That's incredible.
Outrageous. Once you have chosen a loan officer, what's the next step?
The next step would be to get pre-approved. So it's right before you're getting the contract. So I would say get pre-approved. What that means is you submit all of your documents to them, and they go through the different options with you. Do you want to go with an FHA loan? Do you want to go with a conventional loan? Do you want to go with a jumbo loan, a VA loan, a USDA loan? There's so many different options out there, and you as a consumer should not know all the options. You should hire a professional who can walk you through that. So get pre-approved would be the next step.
With O2 Mortgage, how many of those options do you folks offer?
All of them, everything that we just talked about and more. So we've got a ton of different options out there. For the grand majority of people, I would say, you're more than likely going into a conventional or a jumbo loan. And that only has to do with the amount that you borrow, the loan amount that you borrow. But just to know that there's all these other options out there, and to have somebody who's looking at it, to offer you these different options, it's imperative.
That's awesome. That's awesome. Will the loan application cost me anything?
No. Our goal is to make the pre-approval meeting, because it's about an hour long, worth the price of admission, and the price of admission is zero. So no, it is not. It does not cost you anything. And in fact, it should be a really good educational thing, where even if you're not necessarily ready to buy just yet, getting pre-approved early just to obtain that information and that education is important.
Okay. Do I have to work only with that loan officer?
No, that's the other thing. There's no cost or obligation. So, figuring out who you like best is important, right? You're about to buy a home. That's a very big decision. Find the right team, and interviewing a couple of loan officers is totally fine. And then that's part of the process.
Terrific. Do I only work with that loan officer? And what's the difference between pre-approved versus pre-qualified? I know that you answered the first one just a second ago, but what's the difference between pre-approved and pre-qualified?
Yeah, and this is something that there's not a lot of information out there, and you don't really know, even for real estate agents, they don't really know what has gone into that pre-approval letter. Now, I can go on Word and I can type out a pre-approval letter and I can send it off. There's a lot of trust being placed that, what is behind that letter is actually true. So as a consumer, do a little bit of research, ask a few questions. The definition that I would give you is a pre-approval. You've submitted all your documents. You've submitted your pay stubs, your W-2s, your tax returns, your bank statements. They pulled your credit. They've reviewed everything with you. They know what you are, inside and out. A pre-qualification, that's kind of like a cocktail conversation, right? It's hey, you told me you make X amount of money. You told me that, you have a credit score, and yeah, you should qualify somewhere around here, right? To me, that's not worth a lot. That is an initial conversation. A pre-approval is what you want.
Terrific. I am pre-approved for a certain amount. Do I have to borrow the entire amount?
That is a fantastic question as well. And I can't stress this enough, that when you buy a home, unless you're buying all cash, you're getting into a certain amount of debt, right? That's what I do. That's my part of the job, right? I'm going to put you in a ton of debt. And you have to be comfortable. You have to be comfortable with that debt. So, what I like to do is really look at it as, okay, what does your budget allow you to borrow, right? Because that's what you're going to be living with day in and day out, is what is my mortgage payment? What are the taxes? What are the insurance payments that I'll be paying if I buy this house? So get pre-approved for, kind of a little bit above your comfort range, right? And definitely don't buy where, to the max if you don't want to.
That's great advice. I want to ask you one last question, Drew. What's an appraisal for, and who does it?
That's great. So an appraisal is a report that's done when you buy a home or refinance a home. And it's an individual who's coming out to the property, right? They're hired by the bank. So they come out, they're going to take measurements, they're going to take pictures, they're going to look at the bedroom and bath count, the square footage, and then they're going to also look in the immediate area and figure out, like homes, let's say it's a 3-bedroom, 2-bath, they're going to find other 3-bedroom, 2-bath in the same square footage within the same neighborhood that have sold recently, to come up with some sort of value on that home that you're buying, right? So it's by an individual hired by the bank to give a value on the home.
Terrific. With that appraisal, how important is an offer that comes in? How important is it that appraisal hits at least that offer price?
Yeah, it's very important, and especially something that's of concern today, right? When homes are being bid up, right, and it's a competitive market, there's always this kind of, there's other offers that are being made, but we want to be kind of on the upper end to win the deal. But if you offer too much, then maybe it's not worth that, at least not today. And so we have to be concerned about the value of the home. Now, if it comes in low, if let's say for easy math, you offered $100,000 and it came in at $90,000, the bank's going to say, well, even though you're the highest bidder and you're offering 100,000, we could only come up with a value of 90. So we're only going to base everything off of that 90,000. So the difference at $10,000, we have to make up a different way. So it is very important to get a good appraisal. And again, that's part of the conversation that you'll want to have with your loan officer. And also circling back to the real estate agent, they're going to know who has good appraisers, who doesn't, and what loan officer you'd want to work with.
when you find an appraiser, are the appraisers now only chosen by the lenders? How is that working?
Yeah, so that's something that changed, from when I got in the business to now. So there's some changes in the law, really, from Dodd-Frank Act, that require us to hire appraisers through a management company. So we can't directly choose an appraiser. We have a panel of appraisers. So let's say, in a specific neighborhood or area, we might have 5 appraisers. And when we order an appraisal, we go to the management company and say, find us an appraisal or appraiser, and they choose out of those 5. So we don't directly choose who's going to work on your home.
Okay. Is there anything that I haven't asked that you think I should have?
No, I think just, the last thing I'd bring up again, especially for first-time home buyers, you really don't know what you don't know. There's a ton of information out there online, and some of it is fantastic and great. I would strongly encourage you guys to, seek, a loan officer's advice, a real estate agent's advice, earlier than maybe you expect, so you can continue down that path to home ownership.
Awesome. Drew, this has been great information. Now, Drew, I know that you have a family, and we have not touched on your family at all, but I know that you're married with 2 sons, and you have a pretty special story about your family.
Yeah, I definitely do. And I'm still of, I think, young age. I've got a young family, and that's changed my perspective on real estate as well. Having just a home where your family is going to live, and making sure that you're living within your means. So for me, I've definitely changed my perspective of what I do for a living, and I make no qualms about it. I put people in debt every single day, and like we said, it's maybe up to your eyeballs. So for me, I've, just to get a little personal here, I've got a son. I've got 2 sons. My youngest son was diagnosed with a very, very rare genetic disease, and it's been very trying for our family. I've got an amazing wife who's just absolutely incredible, and for us, we wanted to kind of take things a little bit differently, and be able to say, hey, there's a lot out there in life. You don't have to push and do all these crazy things out there. You can just be able to have a pretty simple life.
Awesome. Now, your son, Finnegan, can you share a little bit about Finnegan's story?
Yes. What's that?
Or Finn, as you call
Finn. Yeah. So my youngest son, Finn, as I said, he's got this diagnosis, and I'll pull out the book here. So my wife actually wrote this book. Let me see if I can get it in here. It's called Fantastic: A Story of Finn the Fighter. And the reason why we came up with this book, or my wife actually came up with this book, is we've got 2 sons, and my older son is a typical child. My younger son, he's life limited, special needs, and he's kind of lived in and out of the hospital quite a bit. And so what we wanted to do is write a story, and write it for the Fords. My oldest son's name is Ford, the Fords of the world. So that they could be involved, and kids are naturally curious, and they naturally want to ask questions, and sometimes us as adults say, shh, you shouldn't be asking that, and really that natural curiosity is fantastic, and just coming at it with kindness. And so this book is about being curious, asking questions about kids that are different, and treating them with kindness. And how do you do that, right? So a simple wave, a simple hello, a simple fist bump can really change a kid's day who might be fighting big battles. So that's what this book is about.
That's awesome. Now, I've also got finthefighter.com. If you have an opportunity, for those that are listening in and those that will listen to the replay, I'd ask you to go to the website and purchase a copy or 10. And Drew, I just want to thank you for the chance to interview you today, and for everything that you've actually done for myself and my family. I should have put that out up front. You guys at O2 Mortgage have helped us in the past, and we greatly appreciate it. And we've saved a lot of money, and we are saving money over the next few years. Anyway, Drew, as we come to a close, I want to thank you again. And I want to thank everybody that's listening or will be listening, and have a great day. Thanks so much.
Thanks, Charles.
Bye.
Take care, everybody.
Bye-bye.